Good evening, everybody. Hope everybody's having a nice, pleasant evening. It's a nice spring evening up here. As Mark just told me, it's 100 degrees down there in Austin, Texas. So, Mark, we're anxious again to see your information. Always interesting stuff. So, welcome to the Candlestick Forum.
Thank you, Steve. It's great to be here. I always love talking to you guys. It's a smart crowd. It's a great crowd. And I'm excited to be here. Now, before I begin, I have to do the standard. The standard. What you're about to see is for educational purposes only. I am here to teach you. I'm here to make you a better trader. Nothing that we are going to discuss constitutes investment advice, legal advice, or tax advice and should not be interpreted as such. So if you hear something and you do something about it, that is at your discretion. Just a heads up, and we hope that you enjoy the discussion. So today, I'm going to talk about how we're in a bear market and how money still moves and how we can take advantage of what's happening. But before I do that, I want to tell you a story from when I was on the floor. So for those of you who don't know, my name is Mark Sebastian. I was a floor trader for about a decade between New York and Chicago on the American Stock Exchange and on the Chicago Board Options Exchange. I left in 2009 and started doing education and trading for myself, being a retail trader. But I want to go back to when I was on the floor. And there was a broker for Goldman Sachs named Ogre. His name was John O'Grady, but his badge was OGR, so we called him Ogre. And he would come into the pit, and I was in the Best Buy crowd at the time, and he might ask for a market on some calls in some stock, you name it. We'll say Seprecor. All right, Seprecor. They had a sleep drug called Lunesta, and it was whether or not it was going to get approved or not. And so what would happen is he would come in and say, how are the Seprecor 65 calls? We would make him a market. We might say, they're $1.50 at $1.70. And then he would come back and say, I will buy 10,000 calls for $1.70. I have 5,000. Will you guys do the rest? We would fill him. And lo and behold, Seprecor would go up, and it would go up substantially. And after a few lessons learned through this action, through this trading action, what do you think I did? What do you think I started to do? I learned from Ogre and what he was doing. What do you think I did? I will tell you. I would wait for him to come in and say what he wanted to do. So let's go back to those 65 calls. He wants 5,000 for 170 or 10,000 for 170. Well, I would sell him what I said I would sell him. So I would sell him 250 at $1.70. But then I would go out and I would hit up every other exchange and I would buy as many calls at the 60 strike, at the 70 strike, at the 62.5 as I possibly could. Typically, I would end up buying, if I sold 250, I would want to buy at least 250. Typically, I would end up buying more like 300 or 400, maybe 500. And that was my first lesson. And I got it now, 20 years ago, that when the big money wants something, and go ahead and sell it to them, but you want to trade with them, you don't want to trade against them. And that is what we're going to talk about today. So what I want to teach you guys to do is to be a remora. You guys know what a remora is? A remora attaches itself to a shark. You can see it right there. A remora attaches itself to a shark. And then when the shark bites into that fish, and all that junk, all the fish bits come off the fish, that remora eats all the scraps. And that was what I was doing on the floor, and that is what you're going to learn to do tonight. Because I got to tell you, I've seen some huge remora. They eat very well, just living off of what a hunter is doing. So here is a recent trade that I did right off that remora, just like a remora. We saw in Southwest Energy, anyone following SWN? SWN, all right? In Southwest Energy, we saw a trader come in, and this was on May 13th. On May 13th, they came in and they bought the September 8-10 call spread. Here is May 13th. They bought the September 8-10 call spread. They paid approximately 36 cents for it. As you can see, they were right. So what do? I see this big money step in and go long. And I say to myself, okay, this guy knows something. So what do? I go in and I buy the July 1st 7 calls. I paid 48 cents. You can see the price right there, 48 cents. Over the next few weeks, few days, the stock essentially went straight up. I sold out of my first batch on the 24th. I made 100% on that sale. I sold more at 122 the next day, and I unloaded the balance at 171 the following day. Over the course of about 2 weeks, I did 127%. Now, this is a candlestick forum, correct? Last I checked, this is the candlestick trading forum, correct? This is not the Fibonacci trading forum or the pitchfork trading forum. It was after the fact that I'd already done this trade that I look back, and what happened on May 13th as well, along with this big money. What would you say that this candle is? It's a doji. It is, in fact, a doji. So if I was following candles, I would have that doji change in trend on top of the fact that I've got this massive order saying the stock is going up. So I don't normally trade off candles, but this just kind of flabbergasted me when I was preparing for tonight, because the candle lined up exactly with what giant orders were doing in Southwest Energy. And I made 127% in less than 2 weeks. How? Well, the answer is understanding big money. And this is kind of the track record that I've done since the end of March. And my track record before that is great too. So just following, piggybacking, jumping on the backs of large orders, I've been hitting about 75%, average win rate about 54%, clearing about $3,000. My average outlay on the trades, you can see the biggest outlay that I have is $1,000. Most of my trades are about $500, $600, $700. We made $3,000 in what, 2 months? And I'm going to explain why. So what I'm revealing to you is who are these giant order creators and why they matter. And then I'm going to teach you their secret weaknesses and how you can use it against them. And then at the end, I'm going to show you a big money trade from today and how you can take advantage of it as well. I'm going to give you a trade that you're going to want to probably do. So who is big money? Big money. The guy's buying 10,000 contracts or more. All right. Now, there are kind of two types of large orders that you'll see. One are called sweepers. And these are when they're going into really near-dated Apple calls and buying as many at-the-money calls, maybe a few thousand at-the-money calls, writing them up for 30 cents, and then selling them. I don't care about them. I can't really piggyback those. I'm not fast enough. These are the true smart money traders. Somebody buying 10, 15, 20,000 calls typically knows something. And who are they? They're banks, they're hedge funds, and sometimes family offices, usually hedge funds, and they can be the market makers themselves. But most of the time, they're banks and hedge funds. All right, and here's the thing. These funds, when they're buying these calls, they have staff that work for them. They have people that have been digging into these names for days or weeks. I have a lot of buddies that work at a hedge fund. I run a hedge fund as well, but some of my other hedge funds, some of the big ones, they have these pitch sessions in the morning where all the analysts sit around and they pitch a stock and why they like it, where they think it's going. And they've dug in to this research. They know that a stock is going to go up, typically. And everybody wants to know what they're doing. Let's go back to my story about those Goldman calls in September. So Goldman buys 10,000 calls. I go in and I cover as much as I can. Every other broker will come into my pit afterwards and ask me what happened. Then they're calling desks and seeing what's going on. JP Morgan may walk in a few minutes later wanting to do something similar. And then maybe Bank of America, Merrill, will walk in and want to do something similar. Big money acts like a magnet in that one big order typically begets more big orders and more big orders. All right. So what we need to do is discern what big money is doing and watch for the trades that will be a magnet for more trades. Here's an example. KSS. This was from, January. And you guys see this huge move, January 24th, when it went from 47 to 62 and a half, 60, almost 65. Do you think it was an accident that a trader came in and bought 7,500 of the March 52.5 65 call spreads and another 7,500 of the April 52.5 65 call spreads right before it made this huge move? You think it was an accident? So the question is, how do I determine if an option is sell or buy? I will explain it a little bit when I'm going through my trade at the end. So do you think this was an accident, though, that they were buying these call spreads? Well, the fact that the stock went from 47 to 65 tells me no. this dude or dudette knew something. And they were right. And this happens all the time in options. Every day, I can find 3 or 4 unusual trades that go up where the trader is unshockingly correct. So, big money acts like a magnet. Big money knows what they're doing. They're in a desk. They have hundreds of people working for them, telling them a stock is going to go up. But they do have a weakness. And that allows you and me to beat them at their game. Even in a down market, even in a bear market, even in a crazy market like we've got right now, we can beat them. And I'm going to tell you how. All right? So sometimes smart money makes dumb trades. And I don't mean dumb in that they're wrong. They're not wrong. But they don't buy the best option. They don't buy the best option. Why? Why do you think big money doesn't always buy the best option? Why do they do dumb trades? Well, the answer is they are not option traders. These guys know the stocks. They don't know options. And really, what they care about more than getting the best optimized option trade is just getting their trade done. They care about getting their trade filled. And so that is the secret. They don't care about, they care about the underlying stock. They care about the move it's going to make. They don't care about picking the best option or optimizing their risk-reward ratio. All right? They find a trade they like enough. They buy 10,000. They call it a day. All right? And then there's other times where they have a totally different motivation than you think. Some big money trades have totally different motivations. They may be a hedge. And they may actually want the stock to go the opposite direction of the trade. I'm going to show you how to tell that. And sometimes these trades are not even about the trade. The option is just the afterthought. But if we can isolate on these 3, 4, or 5 huge trades where the trader definitely wants the stock to move in the direction of the trade, and then me being an option trader, knowing how to optimize my risk, I can build a trade that is better than what the trader just put up. So here is an example of Occidental. All right, Occidental, we see a trader come in and buy huge calls. The Feb 30, and so we piggyback on the Feb 35 calls on the 14th. Here, I can show you what they did. They bought 12,000 of the 39 calls. They paid a dime. They bought the Jan 36 calls. They paid 58 cents. They bought some March. They did like a March strangle But the big one was these Jan calls and these Jan calls. And I said, you know, these only have a week to go. There is a better way to get long. So rather than buy cheap Jan calls, I bought Feb calls. I bought 5 of the Feb 35 calls for $1.99. Sold 60% of my position at $3. Sold 20% of my position at $4. Missed at $4.20 and filled the balance at $3.70. Last trade right here on the 27th. The trader that bought his calls, well, it did shoot up. His 39s missed. His 36s won. But we actually did a better trade than them. And this is what we're doing all the time. So the fact that big money doesn't know options but knows the stock and is sloppy, right? They're just going to splash 15,000 calls. That gives us the ability to jump in and do better. So I've seen, and this is the truth, I've seen probably and made thousands of big money trades. I've witnessed the mistakes. I've seen the patterns. I know how big money trades are and are not optimized. I'm going to share with you my system. And I've proven that retail traders can make better, smarter trades off of these big money trades if they're on top of it. So I developed a 4-step system for isolating big money. So the first step is I need to spot the trade. So my scanners that I use in LiveVol allow me to see giant, unusual flow and start to look at those. All right? So when an exceptional trade pops, I get alerted, and then I start digging. So step 1, we spot the trade. Now step 2 is we need that confirmation. And this is the most important step in the whole process. It isn't simply enough just to spot a trade. We need to ascertain a couple of things. Is this opening or closing? Is this some sort of roll? You know, are they moving positions around? Was it done with the underlying? Sometimes options trades go up with stock. And when that happens, it totally changes the dynamic of the trade. And in fact, sometimes a trade that you think is bullish is actually bearish. Sometimes a trade you think is bearish is actually bullish. And sometimes a trade is completely neutral, even though it looks like it has a directional opinion. So I go through the process of making sure the trade is exactly what I think it is. So I need that confirmation. Now, step 3, I need authentication. So spotting confirming tells us one thing, but we need to do a deep dive. We need to see if there's some sort of story behind it. Do they have earnings? Do they have an FDA announcement? Is there some sort of special dividend? Is there some sort of news that I'm not aware of? I don't like playing options into binary events. So I go through this authentication process to make sure there is no landmines in front of me, like an earnings or an FDA announcement or some other event. I also like to see if there's a news story or a catalyst or something behind it. All right, so, here's an interesting one, right? Big money. All right, in Macy's, right? It's an opening trade. We didn't see any mitigating stock trades. They own a ton of real estate. Inflation is good for real assets. Inflation is going up. Stock has been pounded. Reopening trade was picking up steam. We also knew the earnings info. Found the cheapest calls available, made 71% on it. All right. Not going to dig into that trade, but it was a nice trade. So we go through this process. And that's where step 4 comes in, optimization. We need to optimize the trade. So the things I look at, how likely is it that a trade will end up in the money or out of the money? Is there the trade that they did the best way to doing it? Sometimes it is, very rarely though. So can we make a trade that has better odds? And the answer is almost always yes. And because I am an options expert, I can break down the options market and find the best trade. And you're going to see that today. And then we beat them at their own game. So some big money trades here is RDS, Real Dutch Shell. Again, details confirmed. Customer was right. Customer that was right closed and rolled higher. My favorite kind of trade. Right? You gotta, anybody here like to gamble? Anybody here like to gamble? Sports betting. Jim, you're a gambler. Becky, you're a big gambler, right? Steve, you like to throw money at the ponies, don't you? Anybody here a gambler? Wayne plays poker. Gary doesn't gamble. All right. So if you have a friend that tells you, all right, if you have a friend that tells you, hey, bet on this horse in race 2. You don't, but then your friend is right. Then he comes up to you and says, hey, bet on this race, bet on this horse in race 4. What are you going to do? You going to bet on that horse? Nice bet, Matt. Yes, you sure as heck are. And that is the type of big money I love. I love tracking a customer that was right and closed the winner and rolled higher. And I'm actually going to show you one of those today. All right. So the detail, customer is right, closed and rolled higher on the trade. Oil is strong. Stock was below last peak. All right. We identified the cheapest calls on the board. We made 125%. So again, doing this, we have tracked in the last 23 closes, 75% wins, 54% win rate, up $3,000 on these trades. And you can see the most we really ever have on are maybe 2 or 3 trades. I'd be happy to show you my whole track record. And yeah, I will lose sometimes. Right? Lost in Ericsson. Lost in Laser. Lost in USFD. Lost a little bit in UMC. But man, when I win, boom, boom, boom. We go on a lot of hot streaks and we can win big. All right, now, I'm going to give you a new trade here. But before that, I want to tell you real briefly about my offer, about what I'm going to offer you guys. All right, now, I want you guys to try me for a month. Here's that order, $97. $97. Here's what you're going to get. A minimum of 2 big money trades every week. I go live twice a week with and do what we call the Big Money Flow Show, where we break down big money trades, show you the process that we do, put on a trade. You actually see me put on part of the trade, and then I put on the rest after you've had a chance. I've got a whole series of education in there. I've got all kinds of trades. 2 a week, roughly 8 per month. Yeah, 8 to 9 a month. If I really see a good one, I'll just throw it out there. We email you the trade and we text you the trade to your phone. You have email support and phone support. All right, and over the next month, that $97, you're gonna pay for it, and you're gonna pay an extra $97 on it, or you can take I'll give you your money back. All right, and I'm gonna show you the trade right now that I'm gonna give you. But I want you to join me because we're going to, over the next month, I think, clean up. And, I showed you what if, we were closing trades through last week, right? This last trade in SLB, I'll walk you through what we did right now. So here's Schlumberger. And we're going to look at the option trades from last Tuesday. This was the 24th. Customer comes in, buys 50,000 of the June 47 calls. Started paying 63, paid all the way up to 75. I went back through the process. So that was step 1. I spotted this huge order being filled. Then I went in and made sure there was no stock with it. Trade went up at 11 o'clock. So looking at 11 o'clock, I went through and I scanned to see if there was any big, giant stock tied to it. There was not. Next up, oil. Oil's been hot. Oil's moving. Schlumberger, at the time, so this was the 24th. At the time, it had one nice, here's your doji. We got a nice, big, huge candle. Customer bought, when it was trading about $43.34. Bought 50,047 calls. You think they did that on accident? They did not, because they made a lot of money in a very short period of time. All right, and I'll actually even show you the June 47 calls. Here we are on May 24th. $54,000 calls all day. They started buying for 75. By the end of the day, they were already over $1. We bought the 45 calls instead, and we bought them 1 week later. We bought the June 24 45 calls, and I'll show you what the progression looked like. Here's slab. We bought the June 24 45 calls for $2.30. Next day, I'm out at $3.40. Following day, I'm out at $4.05. I bought the June 24s, pardon me. I bought them for $1.50. I sold half my position the next day at $2.30, sold them more one day later at $3.40, and the rest at $4.05. We did 97% in about 4 days. I bought a couple of baby calls on a flyer that expire this week just to keep the position. I'm currently sitting along some Wendy's calls, some AAL puts. So that is what we do on a daily basis. Why so far out? With all due respect, how do you know they were the same person enterprise? All right, well, one, I've been in the business for 20 years. And two, I'm paying attention to the time that these all go up. So take a look. In SLB, I want time in sales, all option trades. So you tell me how I know. So this trade goes up at 11:02:33.001. They started buying calls at 11:01:15.347. They buy 250, 250, 250, 300, 800, 1,000, 1,000, 42,700. They all went up. Why did I go so far out? 3 weeks? That's not that far out. I paid $1.50 for them. They were the cheapest implied volatility. They gave me really good bang for my buck. So the answer is, I don't care what my duration is. What I want is the best trade. And the implied volatility, the cost of the option, was absolutely the cheapest on those 45 calls. These are after the London close. They bought these. And you can see they just swept them all the way up. Boom, 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 boom. And then they put the balance up at their price. So I've been staring at this stuff for 20 years. And so there's no stock with it. So they didn't put up stock. 2, we can see they're overtly buying calls. 3, oil, been hot, slab, just starting to break out, right? We can see, gets a doge, has this big, huge candle, customers betting big on a huge move, and then they run them higher. So what I look at is time and sales data on underlying trades for the stock. Still, why so far out? It was, in relative terms, the cheapest option, Matt. So I don't care about the duration. I have the time right here. I can just look at the time. So I'll just kind of view around and I can see the time that the trades went up. And then I've got these ranked by size. All right. Now, 50,000 of those calls, those June calls, 50,000 of them, they were about a 25 delta at the time. We would have needed to see a print of about 1.3 million shares for them to be good. So the question is, what makes them cheap? The answer is the implied volatility. All right. Well, so here's the beautiful thing. Every night, this software costs about $500 a month. You don't need it because every night I pull 5 trades. If you're a member of Big Money Flow, I pull 5 trades. Yeah, compared to shorter duration, the implied volatility was lower. So when you're comparing option prices, you don't actually look at the actual cost of the option, whether it's $1, because $1 can be really expensive and $2 can be incredibly cheap. All right, so just kind of to put this to rest, Customer bought these for, ran the vol up to 50. So the June 10s in front of it are 49.5 vol. The June 24th behind it are 49.5 vol. The Julys are 49.75. So the IV was actually cheaper in that June 24th strike. So what I'm looking at is implied volatility. And I'm finding the cheapest option that I can buy in implied volatility terms. That is where I'm going to get the best bang for my buck. That is where I'm going to get the best risk reward. That is where I'm going to participate with this trader in the quickest fashion. Do I ever buy weekly options? Yes. All right, so in Slab, you can see we piggybacked them. We bought these calls for 150, rode them all the way up, made 100% in 4 days. Yeah, like I said, big money, they don't really care about price or implied volatility. I'm an option trader. I do. That is why I'm able to make money. I do better trades than big money because I've been staring at these screens for 20 years. It'll be the 21st anniversary of me going on the floor in about the 22nd anniversary of me going on the floor, 21st, in about 5 days. All right, now, so what I want you to do is join me for 97 bucks. If you don't make enough money to pay for that subscription, I'm going to give you your money back. Yeah, big money seems to tolerate big spreads because they don't care. All right, when I'm trying to make $15 million, I don't care about giving up 100,000 when I'm getting filled. And what do I mean by that? So take a look at these calls now. Those Schlumberger calls. By the 27th, those SLB calls, when I was closing, his 47 calls had ballooned to $2.60. You guys know how much money that guy made? He paid about 70, we'll say 70 cents. So we made $1.85, 50,000 times. He's up by Friday. He was up $9.2 million. Do you think he cares about giving up $200,000 on the bid-ask spread? Do you think he cares that he's buying a slightly more expensive option? No. This is how we can be the remora and take advantage of them, folks. This is how we can make our money. Because he's going to be big and sloppy and buy these calls for 55 cents, for, whatever, 75 cents, watch them balloon. We're going to be smarter. We're going to buy our June 24s, pay $1.50, watch them run to 4 1/4, have a safer trade that made money quicker, and provided really good bang for our buck. Interesting, do you know when he exits? He's out of about half of his position so far. Guys, I sleep, eat, and breathe flow data like this. All right? Somebody coming in and saying, oh, I'm just going to sweep calls. You can't trade that. Someone coming in and buying a 50,000 block, we can jump on back of them and do better than them. All right. So you want a new trade, right? Where is my wonderful trade? Don't be nice about it. You guys want a trade? I'll give you a trade. So I'm going to analyze. I'm going to show you a trade in a small stock that you probably don't look at very much. Anybody ever heard of BGS? B&G Foods, Inc. I had not. All right, now we're going to analyze on this trade that went up at 10:59, 15:58. What is going on here? This is where I'm going to explain piggybacking and rolling. So the trader sold the August 25 puts at $3.95. And you're saying, how do I know? Well, look at the bid-ask spread. It's $3.90 at $4.20. That is a sale. Then in the same trade, the trader paid $2.35 for 7,000 of the 22.5s. And you can see they lifted the offer there. Now, why do I like this trade so much? Let me show you. We're going to go to August. Waiting for the data to populate here. I don't know why it's not populating. What the? 1 second here. Am I looking at the wrong symbol? No, BGX. Oh, it's puts. Duh. I was looking at the calls. All right, now. I think you can expand the screen so you can see it, right? So you got the August 25 puts. We look at the open interest. There are 6,000 of them open. There are 2,500 of the 22.5s. This trader sold about 5,500 of these puts at $3.95. What do you think this is? This is a close. So the trader closed the Aug 25 puts and then took a chunk of their money and bought the 22.5 puts outright, 7,000 of them. So this is what we call a close and roll. So they closed a winner. They closed a winner and rolled lower because they think the stock is going to keep going. This is like our gambler. There's that odd put. This is like our gambler that thinks the stock is going to go down. And you can see they opened the trade on the 25th when the stock was $24. I don't know exactly what they paid. I could go look at time and sales. So we can look at May 6th. They paid $260, and they'd already been long in May, actually. They've rode these all the way down. So they paid $260, closing a winner from May, rolling back to August. This guy's been right for a very long time. So they paid $260. They sold them at $395, 5,500 times. What was the size of my trade from today? 5,500. It's a close. How much money did this guy make on his puts? $395 minus $260 times 5,500 times 1,000 times 100. Trader made $750,000 on these. But then they bought 7,000 for $235. They actually spent $1.5 million All right. They actually spent $1.5 million buying these puts, or buying these puts. Then we look at time and sales, and we go to underlying trades. I'm going to go through this entire authentication process. I'm not going to put you in a bad trade. Yep, no stock with it. There was no stock done with BGS. So we've got a trader that was right multiple times, doesn't do stock, closes a winner to open a new position. Do you think this is the type of trade we want to piggyback? What does that mean, no stock done it? So sometimes you'll see a stock tied up. Let me show you an example. And then I'll finish the trade. Again, here is that link to join me in Big Money Flow and get this type of trading at a minimum of twice a week. All right, Matt, we're mostly doing single leg orders. Every now and again I'll do a spread, but almost exclusively it's single leg orders. So I'm going to find one. So here is one in EE. Let's not do EE. What's a good one? Oh, Valley. All right. Valley. All right. So this is the steel company. Trader bought 10,000 of the SEP 19 calls at 10.14. Now here's the problem. 10,000 of the SEP 19s for $1.44. Now when I go to time and sales on the stock, what time did we say that was done? What time was the trade? It was done at 10.14. They simultaneously bought calls and they sold 500,000 shares. Now, if I buy calls and I sell stock against it, is that really that bullish? What do you think? If I buy 10,000 calls and I sell 500,000 shares, is that bullish? Neutral? What do you think? Yeah, it's neutral. You're right, Wayne. Here, I'll show you what it looks like. And I know I'm going into details that I wasn't planning on doing, but I feel like you guys are interested in this and are enjoying this, so I have no problem digging in. So we've got our June calls. They bought, or I'm sorry, it was SEP. So we've got our SEP 19 calls. Paid $1.44. They bought 10,000 of them. So there's this, what it looks like if it's just calls, right? This is what my stock chart's going to look like. But if I sell 500,000 shares, at 18.58, this is what my trade looks like. Now, the trader's expecting it to move, but he's not sure which way. This is why I have to check for stock that goes up at the same time as the trade. Because if I try and track this stuff and it's got stock with it, I got a problem. How much bid-ask spread will I tolerate? I don't tolerate any. I'm always doing my absolute best to get the best price. So I work a bid. I don't just lift offers. And we're not in a rush to get this stuff done. So I give exact pricing that I want trades to get done. So I will read you what a big money trade might look like. So you'll get a text, and it'll say, here, let me pull one up. It'll say, buy to open 8 Wendy's, August 19, 20 calls, pay 90 cents with a maximum of $1. I paid 95. Where can I find more to understand your risk profile? www.optionpit.com. And I read a VIX blog every day and a macro blog every day. There's a lot of good information there. You should be going to my website every day. This is the type of patience and explaining we do with our students when we're in session. Because my goal is, so I'm only giving you 2 trades a week, but I told you I send you 5 good trades every night that went up. And the goal is, by the time you're done working with me, you can look at these trades and come up with a trade yourself. How old am I? I'm 43. So now, back to BGS. All right, back to BGS. We've got our August puts. We know the guy's right. The Aug vol is 42.90. June is 37.24. July, 37.76. November behind it, 45. January, 42. So I want to hone in on July, because July looks cheap on a relative basis. Now, the market is 130 at 155. All right. We want to pay about $1.40 with $1.45 top on BGS July 22.5 puts. So I'm going to type that in right now. Buy to open BGS. No, not, well, this one only has standard. This doesn't have weeklies. But I'll trade weekly. I'll trade whatever I think that is best. Buy to open BGS July 22.5 puts, paying July 15th, 2022. 22.5 puts, paying 140 with a 150 top. That's the type of trade that I would send. Why not June? I don't know that June has enough time. Like, there's a reason why this guy went to August and and didn't stay in June. I'm actually tempted to jump in on August itself. But these July 22 puts, look at this. They are 36.5 vol. This customer paid 42. The November are 44. Yeah, I know. I don't think this is an earnings play because this trader has been in this trade for a very long time. Like I said, they opened the August puts on May 6th. All right, now, one more time. I'm prepared to go shorter in duration than the big trader, yes, but not way shorter, right? July has, what, 43 days? So that's plenty of time for me to be right. But June only has about 2 weeks. So again, you're going to get live access with me twice a week. You're going to get a minimum of 2 trades a week. You're going to get every night an email sent to you with the 5 best trades I saw that you could potentially take advantage of and them explained. And you're going to see and you're going to get the risk management, the whole 9 yards. Generally speaking, if these lose more than 50%, I'm out. when the times I've lost big are when the stock makes a really big move the other way, and I don't sell options that are less than 15 cents if I'm long them. I'd rather just hold the lotto ticket. So again, 97 bucks. You don't make your money back this month between now and July 2nd, my birthday. My birthday is July 2nd. I'll give you your money back, but you will. So I'm pretty confident about it. The sessions are recorded, so if you miss them, you can see them later. How about refunding your losing trade? Well, how about you pay me for my winners? How about you give me all the money from the winners, and I'll pay you back all the money from the losers. You've seen my track record. I'll do that trade with you every day of the week if it was legal. It's not, because we're a publisher. But if that was legal, I would do that trade with you all day. I will trade your money as often as you will let me. Any day of the week, all day. I believe it stays 97 bucks. I forget, we may not even let you re-up at 97 and make you go to the quarterly or the annual after that. I think this is a 1-month trial. What do I send every night? Not selected trades, but what? I send you a picture of the order and the trade broken down, what they did. So what they're going to get tonight, because we didn't do a trade off of BGS today, because I saw it late. Yeah, okay, keep dreaming, Superdog. So then you're going to literally get this trade with a breakdown of what happened, what it means, and how you're going to make money off of it. All right? Cool. So again, join me. You're going to be happy. It's risk-free. I don't know why you wouldn't. And if not, then if you are that dead set, you want to see more, go to optionpit.com and check out our free newsletters. The one you might like is the Pit Report, where we break down different trades, different macro trends, how you can take advantage of it. There's some crypto in there, all kinds of interesting stuff. And just click subscribe. You'll be a happy camper. All right. Steve, thank you so much for having me. If you have questions or you want to talk to my people, you can email us, support@optionpit.com, or you can call us 888-872-3301. I am the primary owner. I am not the only owner. My key members, I give them a little equity so they don't leave, ever. So that is one of the pieces of the deal that I work with. Yes, here's the link to join me. One more time. Matt, you seem like a good dude. I hope you join and try us out. I think you'll get a kick out of it. After the trial period, I believe you're going to talk to our salesperson. I don't know. I believe we only give people a 1-month look. I don't know, but here's what I'll tell you. If it won't go over, you'll talk to my sales team, and we're not going to charge you any more than $97 a month for the following month until we talk to you and decide whether you want to go quarterly, annual, or the lifetime. So we won't automatic, and if you want, you can just tell us, please cancel the I don't know if this is, let me see, I don't know. Does this re-up? I concentrate on trading, not on sales. So I don't really manage this part of the business. All right. And I believe this is $99. So there you have it, folks. I hope you join, and I hope you have a great day. I don't like playing earnings at all. Earnings are such a crapshoot. Yeah, go ahead and call tomorrow. That's fine. Yeah, exactly. So I believe it's 99 bucks. For some reason I saw 149 in there. That's wrong. If they do charge you 149, I'll rebate the 50 bucks tomorrow. Don't worry about it. I'm good for it. I can live. Right? I'm here because I'm not here for the $97. I'm here because you're going to, or 99 bucks. You're going to try it and you're going to love it, and then you're going to want to be a customer of mine for life. I mean it. All right? Have a great evening, folks. I have a 5-year-old I have to put to bed named Valentino, and you have a wonderful day. All right? Rob, yeah, earnings are such a crapshoot. They're what we call a binary event. Yeah, so my wife, we have a kid named, my older kid's named Mark, and my younger kid is named Valentino. And the joke is my wife and I each got to name one kid after our favorite thing. My older one's named after my favorite thing, me, and the younger one's named after my things, shoes and a purse. And yes, I am Italian. So, all right, guys. I hope you have a great rest of your day. Steve, thank you so much for hosting me. Becky, thanks for the help. Jim, thank you for everything. Have a great evening, folks. I am